Funded Trading Plus, a UK-based prop firm, has recently been on a ginormous marketing push. I seem to get ads from these guys just about 5 times every single day. Therefore, I wanted to look a bit more into them, seeing what their conditions are like, and if this is a viable prop firm for members of our community. This video is sponsored by Prosperity Algo and our free Golden Time Bomb Expert Advisor. Do you want to make 100+% annual returns through automating the London breakout and the opening range breakout? Then click the link in the description. So Funded Trading Plus, I thought that they were actually a newer firm, but if you go on the website, you can see that they've been around actually since around 2023, because they've been around since the whole MyForex Funds debacle, whereas MyForex Funds shut down due to regulatory scrutiny. So it appears to be that they've been in the business for quite a long time, and they have rather favorable Trustpilot reviews too. And a lot of their actual programs are quite interesting, seeing as they offer one-phase, two-phase, and instant funding evaluations. And going through some of the different settings here, they appear to be pretty generic compared to other prop firms. And if we go to the one phase, for instance, they start at 12.5 thousand going up to 200,000. And the biggest red flag here for me is that they are using a trailing drawdown like many other one-phase firms. So it's not quite as competitive as some firms like Funded Next or Funding Pips who have moved to using more of a static drawdown. So specifically there, this is probably the most important factor to consider when looking at more of a one-phase style prop, because it has a huge difference into your actual probabilities of getting paid consistently. So this looks rather generic, but I wouldn't say it's super competitive relative to some other firms in the market, just because if you look at the price and the fact that they're using a trailing drawdown, whereas some other firms like Goat Funded would be using a static drawdown, most likely Goat is probably your better bet for the one-phase prop specifically. And if you look at the daily loss too, it's comparable to some other ones. So probably not super great there. And even if we look at the leverage here, it is good, but I'd need to look more into detail if this only applies to Forex or if this would also apply to indices and crypto and to some other asset classes, because usually that's one of the tricks that these guys like to have. The big benefit here is that they give you the ability to actually withdraw weekly. So that would be probably one factor which I would look at, but many other firms have that as an add-on. So like Funding Pips, for instance, you can withdraw every Tuesday. So that would be one factor to consider for the one phase. To me, this does not look particularly competitive. But now let's go to the two-phase account, where they have a few different options here, one of which is a static drawdown, and then some of them here, if you go for the cheaper options, they're giving you trailing drawdowns too. So using a trailing drawdown with a two-phase is actually significantly below market standard, so it's probably not the best bet for you either. So essentially what I'm seeing here, if we look at the two phases, not super competitive either relative to what's in the market. If you were to contrast this to a Blueberry Funded, for instance, you also have like the conditions are not quite as spectacular. We have a 15% profit target, which is matching FTMO without having the FTMO brand and the solidity behind it. So a little bit of a downside there too. So not bad. And I think the reason why this firm has been around for a while is they're actually putting in trading conditions which are pretty stringent. So this means that they're probably able to have enough money to pay out traders, which is a good sign. But from a pure customer perspective, their conditions in the two-phase are also not quite as competitive relative to like a Blueberry, or if you were going to go for these conditions, you might as well just go for gold and go for FTMO, because here they're also limiting your leverage relative to an FTMO, even on a two-phase. So that's not awesome. Instant, this might be a little bit more interesting to some people, just because their cost here is not that crazy either. So let's do some quick math here too, just to kind of see if we see what return thresholds we need to hit. So if we divide the 225 by 5,000, we need to make 4.5%. And then effectively, if we look for a profit split here, they have an 80-20 profit split. So that means that we need to probably make around 5 to 6% to be able to actually recuperate our initial $225 investment. This is actually not terrible for an instant funding firm, because if you look at the pure cost to required threshold, it's quite a bit more competitive than groups like iFunds, for instance, which would have like a much higher, like a much lower profit split, so you need to hit a significantly higher profit target to actually get paid. Moreover, groups like iFunds also generally are more expensive, representing around 10% of the account size as the initial cost. So they are reasonably competitive purely price-wise. However, the reason why they can do this is because they also have a tight trailing drawdown. So that's why you always have to look at the cost versus the rules. These guys are cheaper, but they also have rather strict actual rules in terms of if you're going to get paid. So you need to be mindful of that. If you're a very, very comfortable trader, you understand your strategy, you understand that you're trading something with very low potential drawdowns, this might be for you just because it's reasonably affordable without necessarily having but you do have those rules. So like you don't have as much flexibility. And effectively here, that appears to be the most attractive account. So my takeaway from the 3 different account types that I'm seeing, 1 phase doesn't look too competitive, 2 phase not super competitive either. If you are the type of trader that likes instant funding, the instant funding approach here does seem to be a bit more solid, provided you have a really, really good way of managing your drawdowns. Because any sort of trailing drawdown is potentially very challenging, and it can make it very hard to actually get paid. And people tend to gloss over it, whereas I almost kind of treat it like a no-go. If I see like a trailing drawdown, unless it's insanely cheap, I usually try and stay away from it just because I know the impact on actual payment probabilities. And let's look at a few other points here as to why they claim to be a competitive prop firm, one of which is that they allow you to scale up to $2.5 million. Most firms do this. Frankly, you can just open more accounts across different firms too. So this is less of a huge pro than I think some of the prop firms marketed out to be. They claim to be be started by real traders. They understand the industry and they understand what needs to be done. But really, I think the main takeaway here is that they've been around for a while. They seem to understand that you need to make the rules reasonably strict to be able to pay people out so that you never actually have cash flow issues. They have an experienced team. They are UK based. So all good signs there. The cons are really the fact that their rules and their conditions are not awesome. So for now, I might open a small account with them just to test it out, but I wouldn't necessarily be jumping in to try this particular prop firm just because there's better options on the market. Guys, hope you enjoyed the video. Leave me a comment if you did, and have yourselves a great day.